foreign central banks, get out of dollars, get out of treasuries. You're going to get wiped out to dollar debasement, that inflation. And where are they going to go?
In a world where digital hype collides with economic reality, few voices stand as consistently contrarian and unyielding as Peter Schiff. For over 2 decades, Schiff has warned about the fragility of fiat money, the illusion of stock market prosperity, and the speculative mania surrounding Bitcoin. Schiff begins by drawing a direct connection between Bitcoin and the broader world of risk assets.
I think there's a lot of downside risk in Bitcoin. I mean, I think Bitcoin is much more highly correlated with the NASDAQ. And yeah, tech stocks, the NASDAQ made a new record high yesterday as well. So risk assets have been in favor, and there's been a big appetite for risk. But we can easily have a correction or a bear market in risk assets, and that would include Bitcoin. And I think if investors get more risk adverse, they're more likely to want to buy more gold, not less. So if we have an overall decline in the stock market, the gold bull market can continue, but the Bitcoin rally can't, because Bitcoin is going to follow other risk assets, because at the end of the day, that's what it is. It's not a safe haven store of value the way gold would be. It is a highly speculative asset that people buy because they think other people will pay more for it. And that's, the same dynamic that drives a lot of momentum stocks. I mean, they get, devoid of the fundamentals. People aren't buying momentum stocks because they have a good dividend yield or because they have a low PE. They want to just jump on a moving train, and they're afraid to not be on it because everybody else is in on it, and they want to get these paper gains. And so that's the same thing that's happening with Bitcoin. But there's a big risk that dynamic can reverse. And I think the biggest risk for Bitcoin is all the money that has piled into Bitcoin ETFs that came out of gold ETFs, that came out of gold stocks. A lot of those investors may well try to switch back. They may try to say, you know what, I sold my gold stocks and I bought Bitcoin ETFs. I would have been better off if I just stayed in my gold stocks. Maybe I'll go back to them. I think I got rid of them too soon, and there could be a lot of selling. And then you have a lot of these, Bitcoin treasury companies that have also been the big buyers of Bitcoin. I think that whole trade is going to blow up. And a lot of these Bitcoin treasury companies are going to go out of business. And when they have a going out of business sale, what are they going to sell? Well, they only have one thing to sell. They're Bitcoin. So, there's going to be a lot of Bitcoin for sale. I don't think the U.S. government's going to step up and buy it. I think that's all a bunch of hype about the strategic Bitcoin reserve. So, there's a lot of downside risk in Bitcoin. I don't see a lot of downside risk in gold at all. I see a lot of upside potential, though. Well, I think what you're seeing is the acceleration of de-dollarization that began really a couple of years ago. I think what started it in earnest was the Biden sanctions against Russia, which really was a wake-up call for the rest of the world that they need to get rid of dollars. They need to have a more secure reserve that can't be just confiscated at the whim of the United States. And then I think it accelerated with the election of Donald Trump and the complete reckless and irresponsible spending by the Trump administration, despite the fact that Trump campaigned to try to do something about the reckless Biden spending. He made it worse. The big, beautiful bill just expanded on the excess spending and made it clear that we're never going to get our house in order. Then on top of that, Trump imposed the tariffs and vilified a lot of our trading partners for basically participating in the dollar's reserve currency status. And he's beating up the Fed about how stupid and what a moron Powell is, and we've got to slash interest rates, and he's trying to fire the FOMC members that he disagrees with so he can put his own cronies up there. So really throwing into question the independence of the Fed. And so we've basically told all the foreign central banks, get out of dollars, get out of treasuries. You're going to get wiped out to dollar debasement, that inflation. And where are they going to go? There's only one alternative, one viable alternative to the dollar, and that's gold. They're not going to, move into euros or pounds or Japanese yen or RMB. Gold is the one monetary asset that all these central banks can rely on. It is the system that dominated pre-Bretton Woods, and even in the initial years of Bretton Woods, up until 1971, even though the world was using the dollar was redeemable in gold. So the world was still backing its currency with gold, even though they did it through the US dollar. But now I think, just like we went off the gold standard in 1971, the world is going off the dollar standard, and it is going back on a gold standard. And now what's also significant is Wall Street has finally woken up to this reality. And now you're seeing major Wall Street banks that have never recommended gold now saying that their clients need to have exposure to gold, whether it's 10%, 20%. It's now something that, mainstream investors are finally going to start to participate in. And, prices, I think, are just going to head ballistic from here. Silver just hit a new all-time record high. It's above $51. We finally took out the peak from 1980. I think we're going to be at 100 pretty quickly. We could even be at 100 next year. And I think gold, which is now above 4,000, has a shot at 5,000 by the end of the year, but it may not get that high this year, maybe 4,500. But I think 5,000 is definitely in the cards for 2026. In fact, we could be at 6,000 or higher next year in gold.
According to Schiff, the world is rapidly moving away from the US dollar as the global reserve currency, a process known as de-dollarization, and he traces its acceleration to two key political moments. One, the Biden administration's sanctions against Russia, which froze Russian dollar reserves and woke up other nations to the geopolitical risk of holding U.S. assets. Two, Donald Trump's erratic fiscal and monetary stance, which included ballooning deficits, trade wars, and public attacks on the Federal Reserve's independence.
The reason I put that clip from 10 years ago up on my X account, and that was when gold was at 1,200, right? But that was typical of the way I was treated on like a CNBC when I recommended gold. Everybody laughed at it. They said it was a stupid investment. They said that the only reason I'm recommending gold is because I'm a gold salesman and I'm just trying to get people to buy gold. And of course, they never said that to stockbrokers, of course, which I also was. But you have all these investment advisors and stockbrokers recommending stocks, and they never question their objectivity. They don't question the objectivity of the Bitcoin community. Somebody comes on like a Michael Saylor and says, buy Bitcoin. No one says, well, come on, Michael, you're only saying that because you're leveraged and loaded up with Bitcoin. No, it was only me who recommended gold that they just accused me of just talking my book and being disingenuous and trying to scare people into this lousy investment. And the bottom line is it was a good investment. Most people have done better in gold than in the stock market over 10 years, 25 years. And they're certainly doing a lot better in gold this year by a long shot. They keep talking about the record highs in the stock market. This is one of the worst years ever for the U.S. stock market if you price it in gold. So gold investors are doing a lot better. But my point is that now, finally, people are not getting laughed at for recommending gold. Right now you have, okay, yes, maybe we should have gold in a portfolio. Yes, right. They should have had it in their portfolio 25 years ago. All right. But the fact that they're now starting to include it, not only does that, basically validate what I've been saying all along, but it means that the demand for gold is about to go through the roof. Because central banks are going to keep buying. They have a lot more gold to buy than they've already bought. But now they're going to be competing with private investors, both institutional and retail, in this market. And, I have this gold company called Schiff Gold, and sales for the last 3 years have been very lackluster. I mean, it's not like gold has been going way up. It's doubled, more than doubled in the last 2 years. Yet business has been slow because people were afraid that gold's topped out. I don't want to buy the highs. So a lot of the normal buyers have been on hold. Now everybody is starting to realize that the sky's the limit on gold, that there is no top because there's no floor to the dollar. That's really what's happening. The dollar is going to be losing a lot of value as we open up the spigots. The Fed is cutting interest rates into rising inflation. Not only is inflation well above the 2% target, but it's headed in the opposite direction. It's going up. Yet the Fed is cutting rates anyway. I think by next year, they'll be back at QE because they're going to try to keep long-term interest rates from rising, which is what they're going to do. We're going to see a backup in interest rates as the world sells treasuries to buy gold. In fact, you mentioned, Morgan Stanley said the 60-40 portfolio should be 60-20-20, where you cut the bond allocation in half. So if all these Morgan Stanley clients sell half their bonds, which would be a lot of U.S. treasuries, to buy gold, not only does that push gold up, but that pushes treasury bonds down and pushes yields higher. And the Fed doesn't want higher yields. Trump doesn't want them. So the only way to bring them down is massive quantitative easing, which is just going to drive even more demand for gold because all that is more inflation and more reasons to get rid of your dollars.
He argues that the Federal Reserve has lost control of both inflation and credibility. Inflation, he says, is not under 2%. It's rising again, and yet the Fed is cutting interest rates.